For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. In today's analysis, we are diving into a detailed investment breakdown for Palantir, focusing specifically on what could unfold with its upcoming Q2 earnings report. The author behind this thesis shares their expectations regarding Palantir's future stock performance following the earnings announcement. According to company plans, Palantir is scheduled to release its Q2 financial results on August 4th. Management has communicated that they expect a slowdown in both revenue and adjusted operating margin that does not follow generally accepted accounting principles. However, from the author's perspective, Palantir would only need to exceed top-line and bottom-line expectations by about 1.3% and 3.2% respectively in order to maintain its recent pattern of growth. Considering Palantir's consistent ability to surpass expectations and the favorable trends within the broader industry, this kind of modest beat seems achievable. It is important to acknowledge that Palantir's forward price-to-earnings ratio for the year 2025 sits at a lofty level of 270. There is also the reality that this kind of revenue momentum cannot continue indefinitely. Nonetheless, broader technological shifts are helping to fuel investor interest. For example, during the Advancing Artificial Intelligence event, the Chief Executive Officer of Advanced Micro Devices, Lisa Su, described a turning point in artificial intelligence inference. This shift, the author believes, could place Palantir's artificial intelligence platform in a leading position. Palantir continues to attract both new and existing clients who are eagerly awaiting additional use cases for the company's software. These clients are also likely to benefit from Palantir's deepening ties with the United States Department of Defense, especially after a significant funding package passed in July. Because of this, the author maintains a positive outlook on the stock. Looking back, Palantir posted revenue of $884 million in Q1, which marked a year-over-year increase of 39%. This strong performance not only extended the trend of accelerating revenue growth that began in Q2 of the previous year, but also outperformed the company's internal forecast by about 2.7%. Both of Palantir's major divisions saw notable growth during the quarter. Commercial revenue rose by 33% to reach $397 million, while government revenue increased by 45% to hit $487 million. The commercial segment was especially notable, with its share of total revenue growing by 900 basis points compared to the prior year. This rise was largely driven by expanding adoption of the artificial intelligence platform. Revenue from Palantir's top 20 clients grew by 26% year over year, averaging $70 million per client, which helped quiet critics of the company's growth strategy. On the government side, the author previously argued that we are only beginning to see what a deeper partnership between the Department of Defense and technology innovators like Palantir and Anduril could look like. This view is supported by the recent approval of defense initiatives such as the Golden Dome effort, backed by that major legislative package passed in July. When examining profitability, Palantir achieved adjusted operating income of $391 million in Q1, which represents a 73% year-over-year increase. Its margin also improved by 800 basis points, reaching a 44%. In terms of the widely watched Rule of 40 metric, which combines revenue growth and profit margin, Palantir posted a score of 83%. That score is unmatched by many of its peers in the enterprise software space. Although Palantir's leadership has forecasted that adjusted operating expenses will grow by over 20% in the year 2025, compared to a more modest increase of around 2.5% in the previous year, the author argues that this will not undermine profitability. In fact, total revenue for the year is expected to grow by over 35% in 2025, compared to a nearly 29% growth rate in 2024. United States commercial revenue is forecasted to rise by 68% in 2025, which is an acceleration from its 54% growth rate in 2024. If these projections hold, Palantir's adjusted operating margin could reach 44%, representing a 500 basis point increase from the year before. For Q2, Palantir's management expects revenue to range between $934 million and $938 million, and adjusted operating income to fall between $401 million and $405 million. This would reflect a slowdown in both revenue and margins. However, the author maintains that only a small beat of 1.3% in revenue and 3.2% in operating income would allow Palantir to continue its current upward trend. These targets would translate to roughly $950 million in revenue and and $418 million in operating income. Given Palantir's historical performance and the overall strength of the artificial intelligence sector, this level of outperformance appears achievable. Still, the author cautions that it becomes more difficult each quarter to maintain the same pace of revenue acceleration. The implication is that while momentum continues for now, it may eventually slow. That said, the author emphasizes that broader forces in the artificial intelligence sector remain very favorable. In previous commentary, the author drew a comparison between Palantir's current role and Nvidia's status in 2022 when the artificial intelligence wave took off following the release of ChatGPT. The author sees a similar potential for Palantir's artificial intelligence platform as we shift from building the infrastructure for artificial intelligence to creating practical applications using it. This second phase, which is focused on deploying and generating value from artificial intelligence, is where Palantir's software plays a crucial role. The artificial intelligence platform integrates deeply with the company's operations, taking live data from multiple systems and using it to produce simulations and business insights. In effect, once installed, AIP becomes part of a company's essential infrastructure. Management gave examples on a recent earnings call, highlighting how companies such as R1 RCM and Citi have already seen fast returns in areas like healthcare workflows and customer service. At the same Advancing Artificial Intelligence event, the Chief Executive Officer of Advanced Micro Devices, Lisa Su, stated that artificial intelligence inference is at a major turning point. She believes it will push the total addressable market for artificial intelligence products past $500 billion by the year 2028. If she is correct, and the author believes she is, then the implications for Palantir are massive as businesses move to adopt artificial intelligence at scale. There is also a government component to the story. The large defense bill passed in July includes about $156 billion in increased defense funding aimed at improving United States military readiness and boosting several technology-driven programs. Even though the Golden Dome initiative remains vague, the current administration has repeatedly prioritized spending on software, which points to a continued relationship between Palantir and the Department of Defense. From an investor standpoint, this explains the sharp increase in Palantir's forward price-to-earnings ratio, which has climbed 70% since the beginning of the year to reach 270. Part of that surge, roughly 51%, comes from growing investor confidence. Additionally, Palantir's forward earnings per share have been revised upward by over 19% in the past 6 months. Analyst Greg Moskowitz from Mizuho recently upgraded Palantir's rating from underperform to neutral and raised the price target from $116 per share to $135. He acknowledged that he had underestimated the strength of Palantir's commercial and government growth. Similarly, Dan Ives from Wedbush boosted his target to $160 per share, up from $140. He believes Palantir is on track to become a dominant force in enterprise software, similar to how Oracle grew over the years. As of now, the S&P 500 index trades at a forward price-to-earnings ratio of about 24 for the year 2025. Unless there is a major shift in investor outlook triggered by broad economic or earnings changes, valuations like these may remain elevated. This trend certainly applies to Palantir. The author revisited their previous valuation model, which assumes the company will generate approximately $6.5 billion in revenue by the year 2027. They also estimate an adjusted operating margin of 56.4%, which would represent an increase of 1,230 basis points compared to the year 2025. This margin expansion is based on more efficient spending and steady gross margins of 82%. All of this would result in adjusted operating income of about $3.7 billion in 2027, which equals a present value of roughly $3.012 billion when using an 8% discount rate. Previously, the author applied a forward price-to-earnings ratio of 100, which is more than 5.5 times higher than the S&P 500's 10-year average of 18. Based on continued growth in Palantir's earnings and no major changes in fundamentals, the author now believes the ratio could stretch to between 120 and 125, leading to a price estimate of $149 per share. This is close to the current stock price. Still, Mizuho's Greg Moskowitz cautioned that Palantir's valuation is much higher than any other software company and that it may face a downward adjustment in the future. Nevertheless, he reaffirmed that Palantir is strongly positioned to benefit from long-term trends in artificial intelligence, government modernization, and digital transformation, despite ongoing ongoing risks related to volatility. Looking at analyst projections for future revenue and earnings, there have been no upward revisions over the past month for the year 2025 and beyond. The average Wall Street price target for Palantir currently stands at $105 per share. This suggests there could be a potential downside risk of over 30%. The gap between the highest and lowest analyst price targets is about 75%, reflecting how difficult it is for many investors to evaluate Palantir's competitive strength in artificial intelligence. To wrap it up, Palantir is set to announce its Q2 earnings on August 4th, and while management anticipates a slowdown in revenue and adjusted operating margin, the author believes only a small performance beat is needed to maintain its growth momentum, which seems attainable given Palantir's strong track record and the current artificial intelligence boom. The company reported strong results in Q1, with revenue rising 39% year over year to $884 million, and both commercial and government segments showing solid growth. The artificial intelligence platform continues to gain traction. Favorable legislation, including increased defense funding and growing partnerships with the United States Department of Defense, is expected to further support government revenue. Analysts are taking note, raising price targets, though the stock's high valuation remains a concern. Despite risks, the author maintains a buy rating, citing Palantir's strategic role in artificial intelligence, expanding commercial applications, and long-term potential. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.